All right, I'm going to call the meeting to order. We have our agenda presented to us tonight, which is the public hearing for proposed property tax levy. I would entertain a motion to approve the agenda as presented.
I'll make that motion.
Is there a second?
I'll second.
Motion by Gina, second by Sam. Any other discussion? All those in favor say aye.
Aye.
Opposed, same sign. All right, motion carries. All right, here we go. This is our first time, so bear with us. This is all new to us, so I have a little thing I'm going to read here. This public hearing is required per Iowa Code 24.2A as part of the district's certified budget. The notice provided each resident shows the maximum total property tax the district will adopt as part of the certified budget, which will be adopted by April 30th. The board's secretary is hereby directed to enter any written comments into the record of this public meeting.
I don't have any.
Okay. For those of you in attendance, thank you for being here today. We value your input and are interested in hearing your comments. If you are planning to speak, please fill out that form on the back, which I have here, including your name and address. Your name will be called in order as it was received. Each speaker will have a maximum of 5 minutes. Your public comments will be considered as part of the district's final budget decision. As a reminder, board members are present to listen to and receive these comments. Board members will not engage in dialogue or respond to questions during this meeting, but may address issues that arise at a future board meeting. And we are ready to go. So first off, we have Bob Kaldenberg. You want to come speak up here? Do you want to?
I have no comments. I didn't know what this was. I'm just here to learn. Okay?
So are we.
All right.
Okay. So next on my list with comments is J. Kevin Patrick. Is that correct?
Yes, sir. Go by Kevin.
Kevin, thank you.
So I'm completely new to this. I've never been to any of these type of meetings. Is the agenda going to be covering the taxes that are shown here? Is that our plan?
No, typically, this is a brand new hearing that the legislature asked us to hold.
Yep.
It only is reflected to this statement that you got, which is the taxes levied. What we do is a certified hearing, and that's part of our normal budget.
That's
and
also public?
Pardon? Oh, absolutely. It's held during a public meeting, it's advertised, and that's the same type of forum where you can ask questions. Now, as administration, as the treasurer and superintendent, we're happy to answer any questions, but this taxpayer statement has very little information on it. So,
I'm sure there's probably where I work in Des Moines, I'm sure it's probably a several hundred to 1,000-page document. I don't know what size it is here, but with all the nuances and all the taxes. The reason I'm here is I'm looking at this, and not an expert by any means, and I'm looking at a current tax rate of 5.59 and change, and proposed, it looks to me like it's dropping.
it is.
Yeah.
You're looking at the wrong.
Yeah, I can see here, yeah, so,
I'm gonna come up
yeah,
more.
so, sorry, yeah.
I'm
So,
blocking
no,
you.
that's right, so here's the current, so this is this fiscal year, okay? That would be for next year.
And that's a percentage.
It's $15.95 per, yeah, it's dropping, it's not a percentage, so it's going from 1614 to
Yep.
1595, so it is dropping.
So I got that there, and here,
This is the,
you're also looking at,
but this is just school, down here, you're looking at,
sorry, I didn't mean for this to turn.
no, that's
into-
okay.
You
No,
are-
you're,
You have
this
the
is
same
the
question
county.
we've all had.
So, schools is just up here, so this is us, county, and there's the county hearing, and here's the, city and their public hearing. So we're just talking, this is the only thing that we have up here.
Okay.
Okay, does
So-
that help?
Yes, it does. So
Okay.
I'll just share a couple thoughts, and then I'll let you guys get to it. So this, I was hoping I was reading that right, and it's actually a drop. But what I was seeing is property tax for ambulance and sheriff vehicle and all that. And I'm not sure how it's done here. Do you have a capital funds that you accumulate each year so you don't have one big bill? You know, a $350,000 ambulance, it's like, oh, now we need that.
So I'm going to interrupt you. So that is supervisors. We only partake, this is only for the school district.
Okay.
So the levy that we're discussing tonight is only related
That
to,
very top one.
Yep, to
So-
that top piece there, which is only the school board.
Yeah. The next
School
one
district.
down tells you when that public hearing will be, right above it,
Okay.
and that's where they'll talk about your questions. Does that help?
Yes,
Yeah. So each one of us has to have our own public hearing.
okay,
Okay? Does that
We
help?
just are the first one.
yeah, all right. Yeah, so I'll share what my thought was, which is almost a moot point, but if it's beneficial later. Because I was afraid that usually when you see this, the taxes are going up. So I don't know how you guys are working magic to be able to get them to go down, because that's a rare occurrence. And usually, if it's done as a percentage, I usually struggle with the reason it would definitely go up. Because if we're dealing with inflation and things of that nature, if I'm paying more, then, I'll just make up a make-believe number on a very expensive car. If it's a $100,000 car, obviously, the taxes go up, you guys get more percentage, so kudos if you're bringing it down. I don't have too much more than that. I was just concerned that we were raising the percentage somewhere and I wasn't seeing it because I was reading into the next two parts, which we're not covering tonight.
No worries. Thank you. Thank you, sir.
I think that these tax statements are extremely confusing, and I'm the one that put the data in to present ours. But our current tax rate this year is $16.14, and that is spread over 4 different levies. The general fund levy, which is really our operating account, where all our salaries, our curriculum, utilities, bus, that all comes out of general. Then we have a management fund that we can levy. We have property, plant, and equipment levy, and then we have debt service levy for the bonds that the voters have approved. So those 4 go in, but you don't see any of that on this statement. You only see all the levies combined, and next year we are projecting, now remember, we had to publish this 20 days ago before this hearing, so we believe that tax rate is going to be lower than the $15.95 published. But we can always go lower, but we cannot go higher once it's published. So we're at $16.14 now. We're projecting $15.95 for next year. And that effective tax rate in the middle is current tax rate at next year's valuation. I don't know how they came up with that, but that's what that number means. So does that just kind of get us kind of on the same page as to what we're looking at? Is that helpful at all?
Kind of just scratches the surface.
I know.
What is that 14.8?
That 14,866 is current tax rate of 16.14 at next year's property valuation.
So they're gonna raise the property value. Can I speak, Jared?
Yes, ma'am.
Okay.
I'm gonna be a little lax, probably.
I've only seen it on TV. I yield the rest of my.
We're not that organized.
See, I interpreted it different, but as you say, this form, and Lester even called to try to figure it out better and got nowhere.
I know.
But the effective tax rate is the way I understand it. So if your house, say you had a value of 100,000, next year they're gonna value it at 110,000. So if you left the mill rate exactly the same, your property tax is your estate value, your tax value times the mill rate. So if they raise either one of those 2 sections, your property tax will go up. So you can't look at just the proposed mill rate of 15.95 and say my overall tax dollars will be less, because it isn't, because they've already said they're raising the value.
The values went up, and I put
Yes.
that in the little notes, that
Yeah.
our property valuations went up 5.9%.
So what the 14.866 is, what I assumed was the number that your mill rate had to go down to be equal to, if I pay $1,000 this year and I want to pay $1,000 next year, the mill rate has to go down to 14.866, correct?
No, that's the district's rate. It's not gonna be reflected on individual property rate. That's a different number, yeah.
The property value, but they're raising the property value. So your mill rate has to go down for me to spend the same number of dollars.
Yes, if we were
Yes.
going to tax the exact same number of dollars, if our needs stayed
Right.
flat and we didn't need any additional revenues in the
Right. So that's what that 14 point, that's the value would have to be if we stayed at 0. If you didn't raise or lower,
In theory, yes, but there's
Taxes.
flaws with this with this, equate with this formula.
Yes,
But
so I'll
yes.
just read my statement on that deal, and maybe you will understand it, and I'm welcome for any input, but
And this, hang on, this is Mary Catherine Bigelow.
yes. So there's two values, this is what I wrote up, and so there's two values to your property taxes, the value of the property, and they take it times the mill rate. And when we're talking about the 15.95, that's the mill rate. Okay, changes in either of these, or both of these, affect the total amount of tax dollars coming out of our pocket, going into the school for their services. So it can be affected by either one of those numbers. The effective rate for holding current taxation constant to the mill rate needs to be the 14.8663, the way I understood it. Your proposed tax rate is 15.95001. With the increase in property values for next year, this will actually make a 6.79% increase in our taxes. When you take the current property taxes you're receiving is 1,010,082,520, and the proposed, when you go times your new mill rate, you will get 10,769. You'll get 684,420 more actual taxable dollars coming into your pocket. So you can't say it's not a tax increase when you're getting $684,000 more, correct?
Correct.
Yes. Okay, so and it figured out in my math to be a 6.79% increase in our taxes for the school, okay? Even though you have proposed the lowering mill rate from 16 down to 15.95, with the increase in property values, you will still increase my taxes by 6.79% over last year. The school is 53% of my property taxes, which is over half. So there is the other stuff we were talking about there that will be figured into it also. But that 53% is a pretty large chunk. So if it's going up 6.8%, it's a pretty amount. The example says a decrease of minus 16.21% of the value of the property, but it takes that times the 100,000, and it doesn't tell you that they increased the 100,000. Last year was only 90,000, so your tax difference. So it makes this look like on the back that taxes went down 16.21% when they really were going up 6.79%. Most people work on a raise of 2 to 3% cost of living raise, and I'm not saying that you should stay at the at no increase, because the school is a functioning budget and has wages to pay. So I would like you to consider a 3% tax increase. And when I did the math on that, that came out with a mill rate of 15.31. That's a 3%, that's, like I said, a cost of living raise is 2 to 3% for most of us. Also, be aware that what you raise this year is compounded the next year then. You know, if the property values go up this year, rarely do the property values go down. And so, you know, you raise it 6% this year, and then that's figured in the next year to be raised again. But a 3% is what I recommend, not the 6.7%, which would be a 15.1. Now, Dan, did what I say make sense? Is that all correct, or did I say something wrong?
I can't speak to all of it, and this report, like in the back, where the drop in your properties.
Yeah,
That's-
16% didn't make sense at all. I couldn't
No.
get that. But then it says it's for the 100,000 value, and they didn't say they raised your value. So again, it's the value times the mill that makes your property tax.
There
So,
are pieces of this that make no sense to me.
yeah.
And I've even we've been to classes on it, we've been to other things. I'm not sure where some of their information is coming from back here.
So
I can
It's because of the
only,
rollback.
and yes, the
The
rollback.
residential rollback is greater.
and
The
then-
only thing that we've reported in here is we reported by levies and the total dollars levied. The total dollars levied.
So
and the
is
tax rate
the
we're proposing.
108.25, I always get the
Is it on the
comment,
back?
is what you, no, it's on the front, the current property tax, is that the value you took in last year?
10 million?
10
Where-
million, yeah. 10,082, the first current property tax under all school stuff, that first number?
Oh, they've got no commas. Sorry.
Yeah, I'm saying, it's
I'm
it's
thinking
misleading
that's
because
a-
there's no commas, I would,
Yes, 10,082,514 is what we're levying currently this year.
And then when you go over to the next last box, it says next year it's 10,700,000, and that's how I got the taxes increased 684,420, because that's the difference between those two numbers.
That is correct.
Okay. So, anyway, I realize, that I have another question if I can ask it. So it said here that some of it would be going to pay down the principal bond. So would that mean that next year the mill levy, the taxes could drop more yet? Or how much is your principal bond? How much are you, is that a large amount?
We sold the bonds for the GO project, and what we do is we have a debt schedule that came with it, principal and interest that we're set to pay. So we're chugging along with that.
But you can pay it early.
We can pay it early,
Okay.
which recognizes savings in the future.
Yeah.
So you
it'd
kind
be-
of look at your pros and cons. In this case, we have major savings.
Yeah, okay.
So we're levying more than we need for the actual principal and interest from the bond schedule to pre-levy to save interest.
How many years left do you have on that bond?
I have a debt schedule out here. It was a 30-year bond. The 08 and 09 bonds were paid off early. They weren't supposed to be paid off until 28, and they're no longer in existence. We've paid those
I
off.
thought I did other meetings and that was said, yeah.
Yes, so the
Yeah,
08
just-
and 09 bonds on the middle school are paid off in full.
Which is good.
Yeah, great.
The only thing is then do you throw another bond to build another building and the taxes never go down, but that's another story.
That would be up to our
But
taxpayers.
I appreciate it, we got a few more minutes, I got, first grade chorus tonight, so.
So that is all I had signed up. There was a person that came in late, Cammie, I'm gonna bend the rules a little bit.
Sure.
Either, the ladies that came in late, do you have anything you'd like to, we're not gonna probably respond to anything, but if you have anything you'd like to say to us, or that we can, hear, we're glad to have it.
No, I'm just really glad you explained it, because I was like, am I the only idiot in the room? 'Cause
I had the same questions, we've all called Cammie and asked the same exact questions.
Would you like me to address the management levies?
Please.
I guess we should have called you instead, we called the auditor's office and got nowhere.
And I will just say, this is, so the two that came, this is all brand new. We are all figuring this out as we go. We just decided to do it earlier than the other two that are next week,
Next
I
week.
think. So this is all new. These documents, even kind of some of the numbers you're throwing out, Mary Catherine, I'm like, where was that one again? That was different than I thought what we had.
I
So,
got them all off of here, so.
well, and those papers are different than some of the stuff we've looked, it's just very confusing for the taxpayers. And we were worried that that was going to happen.
Yes.
And I think there's just, and the auditor's office, as you said, they sent them out.
Well, we
But I
have
don't know
five different ones
Right.
of these, and the school was the same on all of them.
For
so
all of your
that's all
properties in
addressed.
different parts of the
Yeah,
county, right,
yeah.
yes, and different tax valuation brackets in the county. So, thank you, and Cammie's gonna talk about the one piece.
There's one more issue on the table for the board, and I brought it up at the last meeting. Right before we were ready to publish this, we got a letter from our insurance company that said they were changing how they were going to pay wind and hail damage to property. Instead of having a flat deductible on a building, it was now going to be, your out-of-pocket would be 1% of the value of the building and its contents. So we looked at our buildings and I did the math, and we have over a $1 million exposure if a tornado or a major hailstorm came through. And because of the proximity of our buildings so close together, one storm could damage multiple buildings. So I came back to the board, and now insurance and deductibles are paid out of the management fund. We've got the 4 buckets, the 4 levies, and they pay different things. So I came to the board and I said, before we publish, what's your comfort level with the district's exposure? And they instructed me to start a reserve in the management fund. And we'll do that for a couple years until we have enough to backfill that out-of-pocket exposure. So that is another, now, it's not in the general fund, but it's in the management fund. So,
There's only really 2 funds the board can unilaterally set. Debt service, and you can go up to 270 to 405, and management to cover your expenses. The right is rate driven. Kids times your per pupil amount, that generates a number that the district has to get to fund the kids. And there's a 540 uniform levy that every district in the state starts out with a 540 uniform levy. And then the state backfills you to 88% roughly of what you need.
83, yeah.
And then your additional levy rate picks up the addition to get you to that total number. So that's all driven by the formula, how many kids we have, what's the state set at SSA, that gets you that number. And then the voters have given the board the authority to have a PEPL, physical plant improvement levy, which can only be used for those things. That's $1.34. The ISL, instructional support levy, which is a combination of property and income surtax, which again, the board set. And then those two, management and debt service. Voters approved up to a 405, so the board can set the debt service up to a 405 levy. By pre-levying, you're paying off debt, which has saved the taxpayers to the tune currently of over $1 million
Correct.
in prior savings. And as the levy rate has gone down, as the overall levy rate has gone down. And then, as Kami said, the management fund covers the insurance, things management. And then, like she said, with the new insurance, that's where that money will sit to cover the exposure should there be a catastrophic tornado like went through before. So a lot of it's driven by how many kids we have, what's the state per pupil cost, what's the assessed valuation, and that gets you that number. Does that make sense a little bit?
Yeah, and I know you guys have brought the mill rate down I've been paying taxes in this county for a lot of years. The mill rate has gone down, but also the property values have gone up. And I look at people on a fixed income or, only getting a 2 or 3% raise a year, 6-7% is quite a chunk to come up with.
Can I piggyback on you? Because I should have let her go first, because she got the stuff that I couldn't think, I wasn't aware of. But you were touching on that, and again, just my ignorance, have never been part of this. Who's setting where do the increases in the property taxes come from? Not you guys, because everybody here seems too nice, I can tell. But I came ready to argue, and I'm not to go home to do that.
Yeah, we have no impact on the assessed valuation. That's the county assessor.
County, it's driven by a state.
Yeah.
They'll come out and
Formula.
say 10% across the board.
So
increase,
they're
whatever.
determining that, but you guys or this group is determining the mill rate and the percentages. So
A portion of it, as Justin said, there's a big chunk of it is driven by a state formula that we don't have any control over.
But as she was pointing out or discussing, when there's an increase like that, and I was kind of leaning over to ask this, if you're gonna have an increase for X amount of time to do the right thing and pay off those bonds and remove some of the excess fees for that, what determines when that rolls back or that goes back to the normal or resets? Instead of just, like she mentioned, taking on another bond. I'm getting off track a little, like where they're asking for an ambulance and those type of things. It should be factored in and budgeted in prior to, but if we're doing something like that and you've got X amount of dollars, we'll stay with the $100,000. Once that's paid, I've got no problem if we really need something doing that, as long as there's a hard date that stops and it rolls back to where we were. And the mill rates and that's what you guys are determining on that, correct? I might be so off that this doesn't even make sense.
Well, we have the ability to pre-levy debt service right now because we don't have any cash reserve levy in the general fund. We've done very well with our ESSER dollars. We've done very well with the line item budget. And so we are not cash short right now in the general fund. But eventually, with the way the funding formula is set up, there are several areas of the budget where you will overspend. And I don't want to get too, we've got a couple of theories going in school finance. One is authority, a credit card limit, and one is the cash that you have. And the funding formula gives you your credit limit and part of the cash, then you levy the rest of the cash. Now, we are very solvent, we are steady on cash, we do not need any cash reserve levy. That's why we have room to pre-levy debt. But as the cash reserve levy comes on, we don't want to raise taxes to get the cash we need to back our authority through this. So that is when we off on the pre-levying, saving that interest. So it's not like we've added that and then it will stop. We've added that because we're at a point where we can and still reduce the overall levy, the combined levy rate.
And you hit targets or dates that cause that, okay, we're here, now we roll back? Or is it just a meeting that?
When we do our budget workshop, we always look out 5 years. We look at all of our assumptions, our valuations, our enrollment, our staffing levels, all of that, and we look out 5 years, because you can't do something this year. You don't want to raise a tax, to drop a tax, to raise a tax. I mean, people, you can't do that. We're on a steady trajectory that we are lowering the combined, and we have.
Yeah, you have. I commend you.
Can I give an example? So if you've lived here a long, long time, you probably remember a $2 increase in your tax rate in the late 2008.
Yeah, I went to those board meetings.
I was there.
The reason you did was because the district got so short on cash, they couldn't make payroll.
Yeah.
So they had to go borrow from the bank to make payroll. We're always playing catch up because the board didn't look at all the levy rates and when can we bring on cash and when can we keep it steady. So to correct their cash problem, they had to raise it $2 to get enough cash so they didn't have to go to the bank. Twice, 2 years in a row. We look 5 years out. When do we think that cash reserve is going to come on? When can we back off on the pre-levy of the debt, bring on the cash levy we need with not passing a levy rate increase on like that back onto the, but it's, cash is, we're looking at how fast is it going to be going away, because we can't levy it every year. We can only levy it when it drops below 25% of our last year's expenditures. And it's always a year behind when you can do it. So when it happens, you need to start levying cash, and that's when you have to, okay, we can't pre-levy debt as much, so we got to drop that down because we got to levy cash so we can pay the bills, so we can actually make our commitments. Does that, you've experienced that before. That was because the board didn't want to raise taxes, but I hate to be critical, right? But they weren't looking out in the future at when that was going to happen and trying to bring it down. We look at where's the sweet spot to drop it down so we can meet all of our obligations. Does that make sense?
Yeah.
A little bit?
I follow. It's just, like I said, I thought maybe 3% at 15.31 might be a,
Yeah,
but
so
you'd
you-
have to go back to your budget and say, what are we gonna cut or what are we gonna do? How many students are we gonna have at 7,000 from the government each or whatever it is, you know, and,
You're looking at an inflation rate of, you guys are feeling it, right?
yeah.
Yeah, 6-7%. We are too, right? 6-7% inflation, right? We're feeling that as well. So everything we buy is cheaper, or is more expensive. The state's bringing on, a 3% increase, which drives that number up by 3%, right? 2.5% to 3%. That's where we're ballparking. So all those are playing to the dollars we need as well to meet our obligations. Same thing you guys feel. What we purchase is going up as well, and the state says, hey, you can grow your budget by 2.5% to 3%, right? That number's automatically built into the formula. Does that? I'm trying to give you a crash course in
I think she's already in advanced class. I'm in the remedial.
And I just want to reiterate too, all of our budget meetings, our school board meetings are always open to the public. We meet the second Monday of the month at 5 here. We had a budget hearing.
This is our first
One, that's right.
We'll have
Another one,
April 8th.
April 8th meeting. We had a budget workshop that was open to the public. That's where we sit down and actually, to your point, Kevin, was on the screens. It's the full line item, nitty gritty. We're looking at adjusting, and this is where Justin and Cammie talked about how we're looking at, like, if we move this now, what does this look like year 1, 2, 3? If we put this number in, what's this look like year? So we get a lot of different variables to move around. Those have always been open to the public like that. I will tell you, we had that public workshop and there was one visitor here, or was there nobody?
I don't think we
I
had
can't
anybody
remember.
this year.
So, but those are always there, and it's that's where a lot we can go through, that's where Cammie goes through literally, I mean, we were here for an hour and a half, line by line by line. I'm not knocking.
my every word.
Yes, but I mean, that's that detailed work that goes into what you guys got in a
Yeah.
little third of a sheet of paper.
Yeah, and that effective tax rate at 14 points, it looks like, God, you guys have really raised it.
Yeah, so I will just say, so please, feel free to, I know, like you said, you call the auditor. I would highly recommend you call and talk to Cammie Lenners, the SBO and the CFO. She is phenomenal. She can answer your questions or explain how those numbers come about, more than probably us up here by far. I'm the senior board member with 6 years, and these guys all just came on in November. So they're still learning that crash course of school board finance 101 as well with the rest of the state right now as we're doing these meetings. So
you weren't on the board in 2008 then?
no, sir.
Just
I'd only been out of high school a couple of years,
I
Mr.
was here as a
Kallenberg.
teacher.
I
So,
was brand new in 2009, the first year they went up
I mean, not only did you have to raise tax $2, they also cut over,
a
a
million.
lot of spending now.
yeah, I mean, it was just, it
So-
had gotten to the point by not looking 5 years out that you were in a pretty bad way.
We utilize a lot of forecasting tools, different things to look at what it looks like for us moving forward.
And in their defense, those instruments weren't there.
They were, correct, they were not
in
around in,
2009.
oh, yeah.
So, from my novice perspective, it sounds like you guys are very streamlined and efficient. But when stuff happens, 2008 and all those, is there any, like a regular household has a savings, do you guys have any savings, or is that not allowed?
Yes, you do. And
Just to smooth out?
It's,
authority and cash. Yeah, whatever you don't spend, you build an authority, but that's not always backed by cash. So it's like a credit card limit, right? So which will allow us to spend more in those years, but you have to have cash to cover it, which is the levy. Yeah, I don't know if I can give you the.
Our,
you know,
I
short
don't know
amount
if
of
you wanna
time.
call it savings, because we don't have savings.
It's not
We
sitting
don't-
there.
No,
yeah.
but remember, when you cash reserve, it's always 2 years in arrears, and that's when you are spending down your excess cash. That's when your solvency, the amount of total cash you have, starts declining. And then by the time you can start levying the cash back on, it comes on very slowly, and then you need it, and that's the year where we won't pre-levy any debt. Or maybe you don't levy any management if we've got a reserve where we need to cover our $1 million exposure. You just have to look at all the different elements out the 4 or 5 years, but there's really no savings in school business. Right now, we have a high solvency rate. We actually do have some that I was able to that we tucked aside into investments that's earning us some nice interest. But as our solvency starts to decline, we'll start spending that down before we can levy cash back.
Okay, thank you.
And to your point, the projections also put down here, like how many staff you should be reducing. Like it talks, if your rate and if your expenditures are going up because of wages and those things, inflation, and your budgets, you're not generating more money, it says 80% of our budget staff. So it'll say you need to reduce 2 staff members or 3 to bring that number back to where your revenues per year meet your expenditures. Does that make? So we are looking at that, to your point. How do we staff based on where we're currently sitting, and what does it look like years ahead?
It's all tough budgeting, all this.
Yeah, you get it, yeah, you
Yeah.
get it, yeah.
And I appreciate you guys lowering it and looking at it, but, like I said, it's still an increase out of our pocket. It's still money people won't have to raise their families.
and we all
Yeah.
pay taxes just like you.
Yes,
I mean,
yeah.
we're all in the same boat up here
Yes.
as well when we sit up here,
Yeah,
so.
and so I'm kind of trying to speak for all people.
That is something we all look at every time we sit through that workshop with Cammie and, how does this affect our constituents in
Yeah.
the school district?
So, thank you.
So, with that, if there's nothing else, any other comments, contributions, questions?
Thank you all for coming.
Yes, thank you for coming in.
Yes.
Thanks for your patience.
This is new to us. We'll get to do this again next year, and we'll be a little
Yes, we
more,
will.
ready for this, and, we'll definitely publish that, and those, like I said, the budget workshop is the one that if you really wanna see what goes into each of those pieces that we're doing, that is the good time to come to that, and that's.
The only caveat I would put there is it's a meeting in the public.
Yes, there's not a lot of questions, you get to listen, you don't get to talk at that one, that's us discussing, people watching, yes. So with that, we are adjourned, thank you all.